Alright everyone, here we are with ticker symbol IDEX, Ideanomics Inc. And this has been a pretty volatile ride. But before we jump into the chart, I want to say welcome to all my first time viewers and investors. Welcome to the channel, Invest for Tomorrow, and to all the subscribers, welcome back. So let's see here what Ideanomics Inc. is showing us here on the chart. So this was our resistance from the 10th leading into the 11th. It broke through support, settled down around this area at 184, and from that point forward it actually broke out leading into obviously what we call today, Monday, right? Today was the day that this ran up, broke through the resistance and needed a breakthrough, but it only lasted one 30-minute time frame. So that was some important things to keep in mind and pay close attention to. That early on Friday it was rising up, and then it started today pretty strong. It fell back down to support, it broke back up, and I mean, this has been a wild volatility ride. We're still keeping in mind here the 170 mark that I've been talking about all throughout this period. Now you can see the IDX is holding itself up, like I've talked before, in this sideways channel. I mean, it's kind of going downwards though. When I draw this, you kind of see that it is going in a downward direction. Now, it could get to the point where those of you that know about the bullish pennant, it could actually come to that point. I mean, some people would say it already did that, right? It kind of already did it. It was supposed to be this indicator that we just saw right now. You know, you can kind of see that it broke out there. Like if you kind of draw it exactly, you want to get it to the T, and let's not have so many lines. You could see here that there was a slight bullish pennant that formed around that point, but it's hanging out around there again, and it could actually continue. I mean, don't keep in mind, don't use these lines as reference. I'm just kind of drawing it out, and it's looking like that, but that doesn't signify that there's going to be a breakout again or anything, or that's why this breakout happened. I'm just kind of pointing that out, that it looks like in the long-term existence of this sideways movement, it's coming to that point. Now, it's holding itself up really well above 170, which I've mentioned in previous videos, and I'm mentioning again, and I want to emphasize that. That's what we need to watch for the most importantly if this is going to continue in that downward trend, because when you kind of look at this sideways movement, yes, it's been holding itself up pretty well, but from here to here, it just keeps going lower and lower. But we need to see what's going on here with this chart. I know that this company had a lot of negative news and so forth, but there's some people holding this up, because for it to still be in this area and not go any lower, and it's holding itself nicely and not touching those 170 lows again, there's investors that are holding this up, believing in it, and I apologize for that. That's from the Neo video. I already posted it. If you haven't seen it, check it out. But the IDEX is definitely holding itself up, but really volatile. This is a lot of ups and downs, and that's something to be aware of and pay very close attention to on how it's reacting. So I'm going to talk about this pretty narrowed in, and this is going to be a very narrow stretch compared to the volatility, and then we're going to talk about this a little bit broader. So let's talk about this narrowed in, the highest point before this fall, right after this recovery, and then the lowest point in that downward trend. The first thing I want to point out is the 50-day moving average, 189. Super important number to keep in mind. It's the one that's letting us know if the bears or bulls are in control, and here we are seeing a big tug of war. The bears right now are slightly winning, and the bulls are trying to reappear here in this candlestick, as you can see, and by that candlestick they're trying to reappear here and bring themselves up. But let's look at this broader and then much more narrow as we want to see for tomorrow. So in the near term, I've already talked about 170, super important support level, but the newest low that was recently hit was 178. That's the one that was hit on Friday. I want every single investor to keep that one in mind. 178 is a very important support level if this support gets broken through. The highest point reached as this was working its way up was 204, and that was a very important point to break through as well. So 204, you want to keep that point of reference in mind and write that down for the near term if it breaks through the resistance. So let's look at our resistance and support for tomorrow. First off, the first thing I want to point out is the 50-day moving average, again, which is 189. We're slightly below it. Support is 187. If 187 gets broken through, this could be on its way down to newer lows, pulling further away from the 50-day moving average in a downward direction. So I want every single investor to be aware of that. 187 is a very important support level to watch and keep in mind. If it gets broken through, we have 178 as another point of reference, and we also have the 170 point to watch how the stock is reacting as it's hitting newer lows. So that's something very important to keep in mind. Now, the 50-day moving average is not that far away. If it gets crossed, which is 1 cent difference, that's a good sign, but the bulls don't just need to cross the 50-day moving average. They need to cross the resistance. This resistance level is 198. That definitely needs to be turned into a support so that this can pull further away from the 50-day moving average in an upward direction, and the bulls can pull away from 198 to reach newer highs and new resistance levels. Now, before getting to 198, there is a midway point if you want to narrow it down to kind of look at it a little bit more narrowed in. 194, but 194 won't signify that the bulls have gone significantly away from the 50-day moving average as 198 in an upward direction, but 194 could be a nice midway point after the 50-day moving average if it gets crossed to look at and watch how the stock's behaving as it's working up until it reaches 198, or if it gets rejected and hangs out around that area. So that's another good point to watch. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and in that video, I will be discussing about the S&P 500 index and how it's been rising several points on scheduled dates. As you see here on the graph, these circles are the dates that the pumps have happened, and I use them as examples to show you guys how much the stocks have risen, and the S&P 500 index rose on those dates. And the reason why it's rising is due to the fact that the Federal Reserve is pumping the markets. On these dates, the charts and the dates speak for themselves, as we can see it here, and I break it down into more detail in the video. But just to summarize it, on these dates, the S&P 500 rises, and there's individual ticker symbols rising up with it, anywhere from 30 cents to $3 per share. I know it may not seem like a lot, but per share that does add up, and these individual ticker symbols are giving you back profits. These are profits, and like I always say, profits are profits. Whether it's $1 put into the market and you get back $2, you've put in an initial investment and you got back more than what you started with. That's what it's all about. And also in the video, I go into further detail showing you guys these dates and showing you how much it rose. Like, for example, this was one of the last pump dates, and the lowest point that it reached was down here at 35.11, and the highest point reached was 35.57. That's like a 40-point jump. And here we're seeing the same thing. It went down to 35.88, and it rose up to about, I'd say, let's see, this is all still in the same day. It rose up to about a total amount of 36.23. When you do the math, that's almost a 40 to 50 point jump, and there's individual ticker symbols rising up with this. Now, I'm not there to guarantee you profits. I'm not there to tell you to buy, sell, or hold anything in particular. I'm just here to inform every single investor on the great news, on the opportunity to maximize profits and minimize losses. You have to do your due diligence and research, but these charts and the dates speak for themselves. I mean, this was probably one of the largest jumps that I've seen in the last couple of pumps, and it was down here at 33.02, and it rose up to about 33.88. That was an 80-point jump. There was probably ticker symbols rising up more than $3 per share on those dates. And even on these dates, there's individual ticker symbols rising more than $3 per share. Check it out. See for yourselves. And my best advice is look for ticker symbols that may be resembling the behavior of the S&P 500 index, and you'll be able to go ahead and give it a shot. Check it out. Again, I'm not there to tell you to buy, sell, or hold anything in particular. I'm not there to guarantee you profits. I'm just here to go ahead and share the information along with every single viewer and investor. The video should be popping up soon. If you haven't seen it already, pop up. There is the link down below in the description. Thank you guys so much for watching, and let's make some money.